So on my immediate left is Christine Pontoppidan of the. I've been practicing that and I still didn't get it right. Of Denmark, this is our last function as a Danish regulator before she joins the private sector and becomes an entrepreneur and consultant. So we need to give her a good send-off. On her left is Professor Andrew Lo of MIT, who I've seen the work of for many years, and incredibly innovative work in both hedge fund replication and recently in creating funds to try and finance disease eradication. So we've got to give that a plug in the course of this talk. And then on the far left, Louise Pentland, who's the general counsel of PayPal, and thus at the heart of this whole debate. So we've got only half an hour to go through. Let's start straight away with considering the issue of regulation and such an innovative financial services industry. It's always a process of evolution where the industry evolves and the regulators struggle to keep up. Can regulators ever, as a regulator, can they manage, Christine?
Well, I think we could definitely manage better. I think as it is now, we're 500 steps behind, and where we should be is 2 steps behind. I think regulators can never be at the very forefront of evolution. That's not our place, and how should we be? We wouldn't know what to regulate and how to regulate it if it isn't invented yet.
There were some complaints this morning. One of the speakers was saying 2 years of research just on the regulations before the company could get founded. Is that a uniquely American problem, or is it a similar problem in Europe?
You know, I'd love to say that we were much better in Europe, but that's simply not the case. The first lending-based crowdfunding platform in Denmark took 18 months to be approved. And they had, everything prepared before they went to the financial authorities, but they had never heard about lending-based crowdfunding before. So they didn't know, were they a bank, were they a payment institution, a money transfer institution? They simply didn't know how to handle them.
And is Europe getting better or worse in terms of level of regulation?
I think we're getting better. I think we're very much looking around. I have a very good cooperation with other European states, other regulators from European states. So we're looking to, what are they doing in the UK? What are they doing in Finland? What are they doing in Germany, France? Kind of picking best practices from around Europe and then doing that in your own country. So it's very much a collaborative work of how can we make regulation better and keep up to speed with technological evolution.
Andrew, you can take a kind of lofty academic view of all this. How do you see the battle between the two?
Well, regulation is a necessary evil in one respect, in that we do need to deal with certain market failures. But I think, as Christine pointed out, we don't want to be having regulation lead innovation. I don't think it's ever possible for regulators to anticipate all the possible innovations that could occur. We wouldn't want them to be spending their time trying to come up with what-if scenarios. But when regulation falls too far behind, we get all sorts of unintended consequences. So I think that the regulators do need to keep up to some degree with the kind of regulatory challenges that they're facing right now.
And do you think the US, from your view, is at the forefront of the regulators keeping up or at the forefront of the regulators holding back?
I think the regulators have definitely made a lot of progress over the course of the last 5 years. Since the financial crisis, the SEC, the CFTC, the Fed, they've all beefed up their regulatory ranks with people that have the kind of technical expertise. But for many years, we have to remember that they were not properly staffed and they did not have the technical expertise, while at the same time, technology has changed pretty rapidly over the course of just even the last 5 years, never mind 10. So I think it's always a game of catch up. And I think the regulators are getting better. But, politicians are undecided as to whether or not regulators ought to be doing their jobs. It's pretty frustrating. We've given regulators all sorts of mandates through the Dodd-Frank Act, but at the same time, we've also cut the budgets of the regulatory agencies. So until we become a little bit more clear as to whether or not we want to have these regulators doing their job, I think we're going to get really a set of mixed messages throughout the regulatory system.
Now, Louise, do you suffer from those mixed messages as somebody at the sharp end, as it were? We were talking beforehand, you're regulated as a bank in Europe, but a money transmitter in the US. That's right?
Yeah, I think for companies like PayPal, the challenge that you have on a global basis is there isn't one size that fits all. I mean, I think that's fundamentally the challenge. And I think what you have to do, because if I take each country for its different business needs that we have, you have to navigate through, and Christine and I were talking about this, when you work with the regulators in certain countries, they've got a list of things that, that they regulate. Are you this, are you that, are you not? And if you don't fit into that category, you often get squeezed into a category that doesn't naturally fit your business model. And I think, the regulation itself has been much more around, I think, regulating a lot of the processes. So while I agree with Andrew, I think they have beefed up a lot of the resourcing since the financial crisis. The regulations themselves haven't changed, right? And so they haven't kept pace with what. This isn't a new phenomena. PayPal's been around for more than 10 years, and other companies are coming into the sort of the space where you've got not just banking needs, but you've got payment company needs. And we are obviously we consider ourselves the trailblazer in that, but we're not the only one. And so, the regulation is very broad brush, I would say at best today, which was sort of, I think, optimized for the lowest common denominator post the financial crisis. And that frankly just doesn't sit on a global basis for companies like PayPal, where we actually play in many different arenas, and the regulation, I think, just doesn't necessarily accommodate that. Is it the problem that you play those different roles, or is it the problem that you have different national regulators to deal with who regulate you in different ways, so that you just have all these extra costs because you're trying to conform to this vast variety of codes? Well, I think I wouldn't even say it's so much that. I think the regulation doesn't always know what to do with the types of sort of technology advances that we've created. So there isn't a mold for what necessarily we and others are trying to do in those particular areas. So, I'll take, for example, the US. I mean, there's all the different state regulators, and they all have a perspective. I mean, take it to its basic. I mean, when I was, joining PayPal, I had to be fingerprinted, 32 times just to get into the financial system as an officer of the company. And the systems don't talk to each other. It's that basic in many cases. And I had to be ink fingerprinted. They wouldn't even do digital, right? So, I mean, I think we're at pretty much grassroots level issues. Exactly. It took an hour, and I was fast. And so I think, we've still got a lot to do. And I think, when we hear from some of the panels like we heard this morning, other countries are sort of leapfrogging, which often happens when you have old infrastructure of countries that were there first. So Nigeria, who's sort of, we talked about this morning, is advancing. I think technology will force that advancement. I think the regulators will have to start thinking about regulating principles versus processes. And do you think, we were sort of halfway through this debate outside, but do you think you should be regulated at all? I mean, it seems to me that we regulated the banks because if people lose faith in their deposits and transactions break down, the whole financial system breaks down. If something went wrong with PayPal and transactions could not be completed for whatever reason, that would be a serious economic event, wouldn't it? Yeah. So how do we as a society make sure that you know what you're doing? Right. Well, I think, first of all, we're a public company, and our value is in our brand, and our brand is in our promise to our consumers, and our promise to our consumers is that you can trust us. And so we invest a significant amount of money in making sure that not only is your data secured, but the transactions that are being processed are secured. It's actually our entire business model. If PayPal, system doesn't work, then we don't exist. And so So actually, I think we regulate ourselves probably harder in many ways than an external regulator would, because that it is the core of what we are and who we are, is to make that system continually work 24/7 on a global basis. We operate in over 200 countries in the world. So from that point of view, I think we hold ourselves to a probably even higher standard in many ways.
Well, that raises the issue with all this fast-paced changing technology, whether the system is safer than it was pre the financial crisis. Because the financial crisis occurred in one part of the system, subprime loans and the securitized versions of it. But we don't have so many of those anymore. We have what we've been hearing about today. Do you think the financial system is safer now than it was in 2007?
Well, in some ways it probably is for the traditional sector. But I think since we're seeing all these disruptive new fintech businesses coming out, I think, we just talked about it, that startups are like water. They'll find a way through whatever regulation we put out there. So if we don't, embrace them and, take them into when we make regulation, they'll just find a way to, make their business model work. And that might not be, all respect to PayPal, you're a big company, and I'm sure that you could uphold the regulation by yourself, or self-regulate. But small startups might not have that ethical sense. So I think if we don't work alongside startups and really take them into whenever we consider what new regulation would be appropriate, I think we would be there would be a margin to see some really bad cases coming out of fintech.
And Andrew, you were saying that the system isn't really regulated as a whole, that regulators concentrate too much on regulating individual activities and companies.
That's part of the issue. It's that the financial system actually is now a system. But we don't look at it as a system. We don't regulate it as a system. As Louise mentioned, regulators focus on specific financial institutions as the silos, and they try to fit you in one of those silos. The problem is, because of all of the fintech that's going on, we're seeing a lot of these institutional boundaries blurred by these various organizations, including PayPal. PayPal's not a bank, but actually it functions in many ways like a bank, and it could certainly offer more banking services if the regulatory constraints were loosened up. So I think that we have to think about financial innovation from the two perspectives. One, it's great because it provides many services that people want and need, and it lowers costs. But at the same time, it also increases complexity of the financial system in ways that regulators haven't anticipated, and we need time to deal with those kinds of innovations.
So isn't the problem that we're sort of fighting the last war? So the French built the Maginot Line after the World War I, and Hitler took the tanks around the outside. The difficulty is we have a crisis. We learn that the way to avoid that crisis is to impose all these regulations, and then the water flows through the cracks. And are we stuck? Is it just we're doomed to have crisis after crisis, just in different areas?
Someone once said that those who ignore history are doomed to repeat it. But somebody else said that history doesn't repeat, it rhymes. And I think that that's really the challenge. It's that regulations are not necessarily flexible enough to deal with innovation in the ways that they ought to. I don't know whether we need more regulation or less regulation. I do think we need better, smarter regulation that actually can adapt to changing market conditions and deal with the innovations as they're occurring in a somewhat more responsive fashion. I published a paper just a couple of weeks ago in the Proceedings of the National Academy of Sciences with an evolutionary biologist, Simon Levin, where we're arguing that you have to think about the financial system as an organic entity. And therefore, when you come up with regulations, you're not putting in rules to regulate a physical system. You're really dealing with a biological one. And so we need to have different kinds of regulations.
But the problem surely is the way in which regulations are created and amended, involving huge bureaucracies, Congress, or national governments, Denmark, whatever. Just it's not that flexible, is it, to adjust that quickly?
Not yet. But I think if we recognize the need for flexibility, we can actually build that into our system. It's going to take a while, but until we sort of acknowledge this kind of boom-bust cycle and the regulatory cleanup that deals with those kinds of cycles. Until we recognize that and start to try to break free from it, we're never going to be able to deal with these issues in a more permanent manner.
And Louise, are you competing against other companies that are regulated as financial services firms, or are you competing against other companies that aren't regulated as financial services at all, or are you competing against both? I mean, is there a problem that you're not dealing on a level playing field when your operations are concerned?
Well, I think because we're creating new markets, so we're offering consumer choice. I think we coexist. So I think that's not the sort of the source of the issue. I think that the challenge is to enable more consumer choice. I think you've got to be able to have, I think, both, if regulation is needed, so it's got to be flexible enough, as Andrew was saying. And I think there's glimmers if you look in the past where that has happened, like ATM, where they didn't make it so stringent that it was only the actual card. So there's glimmers of hope. And I think there's the flexibility that Andrew is talking about, I think, is what the innovation needs. So if you go to, if you think about, the question you were asking about, post-financial crisis, the only people who can sustain that regulation requirement investment is the big banks, who you could argue were the source of the problem to begin with, right? And so what have we really moved the needle on, I guess would be the question. And what happens is you sort of have companies that sort of come up, innovate, and find ways to navigate through some of these things, and then hit roadblocks. And then the risk is that you end up back with the sort of big banks, and consumers no longer have choice. And I think what you need to have with innovation and with regulation, with flexible sort of thinking, because you're never going to be able to regulate for every technology sort of futuristic problem that one might anticipate. But if you had, again, back to my earlier point around regulating for principles rather than processes, then I think you might start to make some headway.
And if you were here for the first session, the banks were basically saying that they would still be in charge in 10 years' time because they would adopt all these new technologies that were being developed, and there was nothing to worry about from the banking point of view. Let's go back to the innovation side of it. So, Christine, do you think that Europe has been innovative? We've heard a lot about how the American system has changed over. You don't hear many discussions of great European financial technology breakthroughs, but what's your impression?
Well, I think they're coming. I think the UK is really, from a regulatory perspective, really showing the way. The UK government has been very forthcoming when it comes to crowdfunding, putting in proper regulation. I think it's just to take regulators in defense, since I'm, at least for another day, I'm a regulator. It's so complex, these new business models. We've been going through crowdfunding regulation in Denmark, and it's involving 6 agencies and 3 ministries alone, just on crowdfunding. So it's massively complex. I do think that there are some really good things coming out of Europe. The European Commission has taken a whole new approach when it comes to crowdfunding. So they've actually invited all the crowdfunding organizations in Europe into the Commission to sit down with the Commission and member states in a new forum to talk about, okay, should we put more regulation into place? Should we deregulate? What sort of factors are in play here? How can we, make this new financial tool grow and prosper, and at the same time, make sure that investor protection is still in place, that we do have the proper regulation. So I do think that, we've surpassed the US in regards of regulation, because the US SEC has taken so long to put Jobs Act into account, that the Commission actually has a chance to put proper regulation into account.
Now, Andrew, I wanted you to have the chance in 2 minutes of talking about financial innovation, to talk about the funds, the oncology fund. I think that the idea of using financial innovation to tackle diseases. So, shoot, give you 2 minutes.
Sure. Well, financial innovation is a two-edged sword, and it's caused some great difficulties over the course of the last 6 or 7 years of the financial crisis. But we have to remember that securitization, credit default swaps, all of these tools can do some really important positive things. And so one of the things that I've been working on is whether or not we can use these tools to create large portfolios of biomedical projects to speed more of these transformational therapies to patients. By taking a large number of projects and de-risking them and using securitization to pump money into these kinds of projects, we can actually lower the cost of capital to the pharma industry while at the same time giving investors a decent rate of return. So that's an example where financial innovation could actually play a very positive role if it's managed properly. And actually, speaking of Europe and the UK, the mayor of London a few months ago announced their intention to create one of these large mega funds to finance biomedical innovation. So the hope is that we can actually think about dealing with these challenges while at the same time making full use of these technologies to benefit society.
Fantastic. That was well within 2 minutes. Louise, in terms of innovation and regulation, for existing operators, it can be quite good, can't it? That if somebody wanted to set up a rival to PayPal, it would be costly and time-consuming to do so. So do you see yourself as sort of having a moat drawn around you and being protected by existing regulation, or do you worry that something is going to come along and Bitcoin-like replace you?
I don't think competition's a bad thing. I mean, I think competition's always good, and I think someone said it earlier. It's healthy, and I think it would be remiss and almost sort of arrogant to think that there wouldn't be competitors. There are competitors to PayPal today. I think that the challenge is, to recreate what PayPal's done, it takes significant investment in security and risk. I mean, we offer our customers, the safety and security that if they buy something using PayPal, if it doesn't show up, we give you buyer protection. Well, that doesn't just happen overnight. You have to have an entire infrastructure and environment to allow that safety and security and peace of mind to be in place. So I think it's more the value add elements of what we bring as PayPal that give people choice. But that's not to say others couldn't do it either. It takes significant investment, it takes time, but that's okay because we're going to keep moving our own needle and probably disrupting in new places. I mean, that's the whole point of capitalism. And I think that's, ultimately where we want to go. I think the regulation itself, I think where PayPal and others like us can really, I think, drive, and Christine and I were talking about this earlier as well, is that there isn't enough collaboration between the private sector and the government. And I think if we start to see more of that where we can help each other, I think there's just generally been this sort of, void where the regulators kind of figure out what they want to do separate to, where industry is going. And I think more collaboration actually in that way is going to probably move the needle.
Well, I want to give you the chance to ask questions, so if anybody has a question, there's a gentleman right at the back there, hopefully within easy range of the microphone. Oh, it's coming. Just hold on a second. If you could just tell us who you are, sir.
John Dysart, I'm an FT columnist. I have a question in particular for Kristen. There are perverse incentives for, or have been in private markets for people not to treat each other well or not to follow through. And isn't there not a perverse incentive in the regulatory community to create work for itself and for the people who move from there to, say, law firms or consulting firms to overcomplicate regulation? And shouldn't this actually be something that is also considered a risk, along with the risk of fraud or overcharging or false payments that PayPal and people like that have to deal with? There's some kind of self-limiting, self-imposed limits on regulators or some consensus limits on the burden of regulation that could be incorporated in your planning, or in your enabling legislation.
Yeah, obviously. So obviously, I can only speak from a European and mainly from a Danish perspective. I don't know anyone who does that. I've been working with the government for 10 years almost, but I do think that as regulators, we tend to go for minimum risk. We don't want to put our minister, our government into any risk, so we tend to regulate as safe as possible. And what has been the problem is also that we don't wipe out the board when we do new regulation. So we just put regulation on top of regulation. So whenever a new, let's say, crowdfunding comes into play, we look at the regulation, say, okay, that doesn't really fit, so we want to do some new regulation. But instead of starting from scratch, we just put new regulation on top of the old regulation. So you have this massively complex system that companies, you have to be a big company or have really good lawyers to understand the regulation. And that simply just doesn't foster a good system. I think what we're seeing, especially in Scandinavia, is that there's a really positive tendency to deregulate. So we sort of want to remove regulatory barriers, especially to startups. That's becoming a real focus point of regulators in Scandinavia. And that hopefully that'll spread, because as it is now, we just regulate on top of regulation.
Thank you.
Andrew, you're nodding.
Yeah, well, so I think there are two really important issues that was brought up by the question. First is who regulates the regulators? And the answer right now is no one. So one solution to that would be to create a kind of a national transportation safety board equivalent, something that I've written about many times, where you actually have a group that has no regulatory authority, but is charged with the responsibility of reviewing accidents as they happen, and in some cases criticizing the regulator for being a little bit slow to move or having certain kinds of unintended consequences. But having said that, I will say that all the regulators that I've spoken to, they, I think, share the frustration of complexity. So I don't think regulators are looking to have more complicated regulations in order to get job tenure. I think that they have that anyway. I think what they would like to do is to be able to do their jobs better, and that really requires a different set of legislation. So to give you an example of the kind of incentives that I think you're referring to, one set of incentives that are problematic that Christine mentioned is the conservatism among regulators. Right now, if you think about what the regulatory landscape would look like for dealing with a growing issue with ETFs, ETFs have been growing rapidly over the course of the last few years. Can you think of any regulator that would be willing to step out there and say, no, ETFs need to slow down their growth. We're going to stop the ETF market from growing. No regulator in their right mind would do that at this point, given how popular they are, given how much political pressure there would be to keep that business growing. So I think that's the kind of counterbalance that you need to have. And it's not clear that you can do it within the regulatory agency. You need to have a separate body focused on looking at the system as a whole, charged with the responsibility of just understanding the safety of the system and then writing reports and recommendations based on that.
Oh, that went down very well. There is another question here. Or two, possibly. Maybe we can just get you both to ask the questions, then that we'll finish off with those two together.
So thinking about outcomes instead of rules, there's safety and soundness, and arguably we're in a lot better position post-financial crisis globally because of capital requirements, living will, and so forth. Consumer protection is also in a better spot, but banks are also on the front lines of the global, or banks, the financial system is on the front lines of the war on terrorism, AML, the ability for one country to sanction another. And we've seen and heard about technologies over the last year that could make large-scale money transfer internationally happen without regulation, without oversight. How vibrant is the dialogue on that topic? Because it seems that outcome is more at risk than any other.
Can we just let that gentleman ask behind you, ask a question if you can grab the microphone? Yeah.
Double team the questions?
Yeah.
I was going to ask about the relationship between industry and regulators. It used to be considered a terrific thing to do to leave a high-paying industry job to go and serve the public by becoming a regulator. And at least in the US now, that's actually considered somehow a bad thing to do, or at least suspicious. And there's certain political mood that suggests that people moving from industry to regulatory side is a bad thing. And I wonder if you would, how you feel about that.
Louise, would you be able to tackle the first one and hold an international, because you're presumably involved in it, international payments and
Yeah, and
anti-money
actually
laundering.
we're in the process of acquiring a Zoom, which should close hopefully this quarter, which is an international money remittance company, and I think that's certainly something that gets a lot of attention. I mean, I think the AML regulations are there for a purpose. In fact, the scrutiny in that and the investment we double down on all the time, because actually I think the sort of the global landscape for how that's being utilized, I think is ever increasing. So I think the question and the point that was made is very, very much prevalent, I think, on any financial services mind when you think about what's going on on the global landscape. So
Can that circle be squared? Can you make it easier to make international payments whilst preventing terrorists from making international payments?
I think you can. I think that's certainly where we feel like we can add value.
And Christine, to answer the second point, you're going the other way.
I'm going the other way.
But in Europe, well, it used to be, I know, the takeover panel in Britain, people would be seconded for a year to work on it as a kind of slumming it for lower pay. But what's the experience in Europe? Do you get people moving from industry to?
No, I think it's a really, really good question, because we don't. I have a lot of colleagues, well, I have some colleagues at least, who move from government to private industry, almost none going the other way. And when, of course, yeah, so it's lower pay, but it's also just the sense that, the previous question actually symbolized it, the thought about, that government officials regulate just to regulate. There's no sense of, most of my colleagues work where they do because they do believe that they make a difference for companies. They want to better the regulation for companies. They want to create more growth in Denmark. And that sense just really isn't out in the public, that we actually do what we do to make Denmark a better place to drive a company in. I think if we want more skilled people to move from private sector to government sector, we really need to tell that story that, we work where we work to make the framework for companies better.
Thank you. Well, we're out of time, but there's going to be a split now for strategy sessions. If you look on the back of your badge and it has a red dot on it, that means highly trained snipers are focused on you. No, it doesn't. It means you'll be staying in this room for a session called Getting Along, Surviving the Big Disruption, sponsored by Hewlett-Packard. And those who don't have a red dot on the back of their badge will be going to where we had lunch, the Tower Room, on a session of Banking the Unbanked. But before you go off, those of you without the red dot, could you please thank the panelists? Thank you very much.